In our country, finance and technology collide like no other. In fact, we have been praised multiple times for the developments we have had in our fintech space, including the introduction of UPI, which has changed the way that India banks and pays for things. So while looking into this technological shift, I was trying to identify few companies and sectors which were very interesting to me and showed further growth potential. And that is when I thought of what other industry to analyze than the industry we all are in right now, which is the stock market industry. The number of new demat accounts opened in the country and the new mutual fund investors coming and opening up their account does not lie. It shows that there is a clear trend. Even though the market might not sustain the last few years a 30, 40, 50% CAGR growth, I believe we definitely will keep on seeing a growth in this industry. So that's what this video is about. You and I are here because we believe in the stock market, but then there are some stocks which are banking on the same as well. So why not go ahead, study them and understand if any of them are worth looking into. As always, these are not stock recommendations or advice. This is just part of a study we were conducting on this sector. So yes, this is Ajay Ajith. Let's get started. So this is the demat account growth rate in India. Even last December, January and even February has been surprising the Indian stock market by just the sheer number of demat accounts being opened in the country. So let's discuss about few stocks which will be benefited by the same. And the first in my head, as always, will be CDSL. Whenever you open a demat account under your broker is just holding your trading account. The demat account is always held by a depository and the broker is just a depository participant. You might have heard that term DP or depository participant multiple times. So every time you open an account with a broker, a demat account is opened, and mostly nowadays it is being opened under the company known as Central Depository Services India Limited. So when you look into the company, you'll be understanding that CDSL facilitates holding and transacting securities in electronic form and facilitates the settlement of trades executed on stock exchanges. So as you know, the demat account holds your stocks, right? And whenever you sell or buy that stock, CDSL as a depository will be handling the transfer and settlement of that share. And currently 79% of their business is coming from the depository business, where it is showing that these are all the things that they do, right? Holding, transfer, pledge of securities, dematerialization, all of this is what the company looks into and makes money from. Now what I like about the company and its possibilities is that the company is doing really well right now. We'll go into the financial performance, but when you're looking into their future, when you're looking at a qualitative growth of how the Indian fintech space itself will grow, you'll see that there is higher and higher chances for every security that we own that will be dematerialized, right? So whenever you're owning a house, the deed to that house, the property rights, that could also be dematerialized. Even today it can be done, but I feel going into the future, this will be more and more common, and a lot of our assets and our properties and our deeds will be stored in CDSL as a depository. And as I said earlier, naturally as the number of demat accounts grow, companies like CDSL, the depositories, also will be growing. The sector is a duopoly with only CDSL and NSDL as players, but again the major player in my belief is going to be CDSL. They have a bright future ahead. In the profit and loss sheet, you can see that they're holding a steady revenue increase. Even if you're comparing to March 2021, which was a lockdown year and a lot of investors were active in the market, even that year the company managed to get a revenue of 344 crores with a net profit of 201 crores. But if you're looking at the last 12 months, the company is nearing 700 crores revenue and reaching a net profit of 353 crores. When we are looking at the price graph, it is kind of similar to where the stock was doing in December of 2021 and January of 2022, right? It was trading at around 1600. Now it's at 1750, almost 2 years later. So I feel it's at a good price right now. But if you're looking at the price to earnings ratio, right, you can see that as we talked about in the last video, price to earnings ratio is nothing but the price of the stock divided by the earnings per share of the company. So that you can see here that this blue line, it is a PE graph that is being shown, and behind all the blue bars, right, all the blue rectangular bars, they are the earnings per shares of the company. So there was a slight dip in the earnings per share over the year of 2022 and 2023, but right now it's at an all-time high. So even though it is at a slightly higher valuation, the PE is a bit high at 50, since it's a duopoly company in a fast growing sector where every user has to open this demat account or an account with CDSL. I feel they'll be in a good spot to keep on growing in the future. So CDSL gets a thumbs up from me. So now that we're done with CDSL, the next company which I wanted to discuss is AngelOne. Yes, it is a broking company previously known as Angel Broking. And when you're looking at their business, it is very interesting to see that they provide not just a broking business, they're also in the distribution of mutual funds business. They're also lending as an NBFC, and they also have corporate agents of insurance companies. That means they're selling insurance as well. In fact, that is why they changed their name from Angel Broking to AngelOne, so that they can sell all of these products under the same umbrella. Now, there are multiple reasons why I'm interested in this company. So let's get into a few. When you're looking at the largest broking companies in India right now, the first one is Grow, which is not a public or listed company. The second one is Zerodha, which is making the most revenue and most profits, but again, not a listed company. And in the third place, there is AngelOne. So in a market where there are hundreds of players, AngelOne managed to differentiate itself and make a very profitable business that is both large in revenue as well as in net profit. Their management was very aggressive during the lockdowns to shift from their old plans of a full service broking and offer a complete discount broking solution. And when you're looking into their revenue, it is clear that the company has managed to make money even on their delivery transactions, because when you're looking into their revenue breakup for FY 2022, their gross broking business is contributing nearly 68% of revenue. Their interest on deposits, interestingly, is contributing 16% of revenue. And when you're looking at the gross broking revenue split also, it is very clear FNO is making them the most of money. So the number of FNO traders in the country has absolutely exploded. It is kind of on a slow track right now in this year. If you're looking at it, slower than previous years, still growing, but they've managed to make a decent amount of money from the cash and commodity markets as well. The major risk in the company is also this factor: what if SEBI introduces certain rules which is not in the favor of options or FNO traders in India? If that happens, broking companies like AngelOne would be in trouble. But as of right now, there are no problems in this industry, and AngelOne is the biggest listed player in the space. And if you're looking at their price to earnings graph, it is at a relatively cheap valuation, I would say. A valuation of around 20 for a tech company like AngelOne, I feel is very justified, and I will be thinking about adding more of it into my portfolio. Again, this is not a stock recommendation. This is just based on my research actions that I'm taking. Make sure you do your own studies before investing your hard-earned money into any company. You can see that the company has had a steady growth in revenue and net profits over the last multiple years, reaching 1,400 crores this year, which is a good growth even from the last year's high base. The only concern for me was promoters keeping on reducing their stake, but FIAs are the ones picking up that stake, so I feel it is justified, and I'm hoping that this higher foreign institutional holding will benefit the stock over the coming years. And the last stock that I want to discuss today with a lot of growth potential in my opinion is BSE Limited. So if you're an FNO trader, there is high chances that you've only traded in NSE FNO contracts. In fact, a lot of people don't even know that BSE has started to offer a proper FNO trading system. The story is quite simple. Even though BSE is a much older exchange than NSE, which is a national stock exchange, in 1990s when the NSE came in, it tried to digitize the entire broking ecosystem from the start and even introduce futures and options which changed the game. So because there was a lot of money making opportunity in NSE with the FNO, and there was also higher hedging opportunities using options for cash traders, almost the entire market volume shifted to the national stock exchange. And now NSE has built out that market, and the only thing that BSE has to do now, which is a Bombay Stock Exchange, has to do now is to make sure that they offer a similar trading experience to NSE and they bring in liquidity and awareness to their FNO contracts. As we saw earlier in the case of AngelOne as well, for any exchange, especially in India, to work, their major chunk of revenue should be coming from FNO. So right now, NSE has done all the hard work. They've created the awareness. They've created a market which never existed before with FNO traders. And all BSE has to do is to slowly bring more and more people from the NSE to the BSE. In fact, that has already been happening. Sensex options have been getting more and more liquid over the past multiple months. And the turnover in the exchange over this financial year will also be very high. You can see that this is starting to reflect in the earnings per share, which is a blue graph that you see behind. The earnings per share is steadily increasing. And the PE ratio, even though it is a bit high, I feel it is justified just because of the sheer market opportunity that exists. The NSE IPO is also coming out very soon, and if the rumors are right, it is going to be at a very high valuation. And BSE's market cap at 30,000 crores will be nearly 1/10th of NSE's valuation at the IPO, and I feel it will be very much justified as well. And over the last multiple quarters, a steady growth in revenue and even net profit is also really commendable. So yes, these are the three major stocks that came into my radar when I was looking into this industry. There are a lot more others, and I want you to research all of them. And as we said earlier, you and I are here because we believe in the industry and we believe that the Indian stock market is going to do really well in the future. And the fintech space in India is also showing a lot of promise. So yes, that's it guys. Thank you for watching the video. Make sure you hit the like button if you like the video and subscribe if you're not a subscriber already. This is Ajay Ajith signing off. See you again. Bye bye.